Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And today's lesson is going to be about tweezer tops and tweezer bottoms. How to recognize a reversal pattern with using tweezer tops and tweezer bottoms. You can use them on different time frames, depends on how you like to trade. If you're a swing trader, you could look at them on the daily, on the weekly, and even on the hourly. And if you're a day trader, you could look them on different time frames like the hour. You could even look it on the daily, 15-minute, 5-minute, 1 minute. And if you're a scalper, you want to use the 5, 3, 2, 1 minute and get in and out of them trades within 30 minutes. So the difference between a swing trader is you hold it overnight. A day trader, you just hold it until you're finally ready to get out of it. And a scalper, you want to get out of it between less than 30 minutes at a time. So I'm going to show you how easy it is to identify these reversals. And we're going to go straight to the tweezers, what's it mean, and how it works in technical analysis. So a tweezer top is a technical analysis pattern commonly involving two candlesticks that signify either the market top or a market bottom. Tweezer bottoms are considered to be a short-term bullish reversal pattern. Tweezer tops, although, can be bearish reversals. Tweezers were made mainstream by Steve Nissen, popular candlestick charting book, Japanese candlestick charting techniques. Well, I didn't know that until now. So we're going to go ahead and look at the pattern itself, and I'm going to take a little drink of my jasmine tea. Today's tie Sunday, as you can see. I'm wearing my suit and my tie. Market's not open tomorrow. So this is a little chart pattern that I have. This is the SPX on how to identify a swing trade, or even how to identify a day trade on the 1 hour chart. So today's lesson is tweezer tops and tweezer bottoms. So as you can see, we've got all kinds of little patterns right here. Now there's two ways to identify. I use the bodies of the candle. Some people would like to maybe even look at the wicks and see if they line up. But I find that the bodies show up better than they do on the wicks, because the wicks can kind of be, lopsided a little bit, but the body of the candlestick is where you want to look at. So right here at the beginning of 20 days ago, we had a little tweezer bottom. I'll make sure I got this on my... Right over here, you see the two bodies of the candlesticks. Just go ahead and line your trend line up there. So when you start to notice something like that, that means you have a little tweezer bottom. So that'd be a good time to jump into this trade, especially if it started forming and started going up, and you didn't think it was going to pull back anymore. And we did bounce off of one of my famous moving averages, which is the 21 EMA. So that's a tweezer bottom, and then you have a tweezer top right up here. After hours, come in the next morning, and then run it on up. Here's another tweezer top right here. So you're going on throughout the day, and you recognize that tweezer top. You know to get out of that trade, because you might be coming into a reversal soon. And she pulled back and hit the 9. And then you have a tweezer bottom right here. And it bounces up off that 9. You could run that all the way up from 27 all the way up to $60, or wherever you wanted to get out. Maybe you wanted to get out of here at the triple top and get out of that scalp. So those are the difference between tweezer bottom. It identifies a reversal. We had a tweezer bottom with 3 white soldiers and get out of the trade. And then you had this resistance line right here on the body of this candle. So if you extend this all the way out to the left, you know that you're coming close to a resistance level. and you might want to get out of that trade before into close. Here's another day right here. The next day we had a tweezer bottom on the 1 hour time frame, and she bounced on up. Then you get out at the top of that candle. That'd be a tweezer top. It didn't form up there. Then you had a tweezer, oh, that's a long leg doji, so that's still bullish. Then you had all these tweezers right in here that went on for about 3 hours. It held that resistance on this other candle. So you got some tweezer bottoms here, and we had a nice little breakout into close. Same thing right here the next day. We had a tweezer bottom at open, and she bounced on up, broke out to a tweezer top for an exit idea. And this thing could probably be running up and down, and say, well, I'm going to get out of this trade because it doesn't want to break that resistance of that candle. And then she closes, and there you are. You made your exit idea because it started to pull back. Here's another tweezer bottom, runs on up, creates a tweezer top on the 1 hour time frame. So those are like day trades. So you had a nice little breakout, and then you have the tweezer top, and she pulls back. You have a tweezer bottom, and she breaks out. You have a tweezer top, and she pulls back. It's consistent, very consistent on the 1 hour time frame. You have a tweezer bottom. The next day, here we go again. Tweezer bottom, tweezer top. Tweezer top, get out of the trade by the end of the day. Tweezer bottom, runs on up and hits the tweezer top resistance. Out of the trade. Next day, tweezer bottom, runs up to a tweezer top. Get out of the trade. 1 hour time frame. Tweezer bottom, runs up a little bit, not much of a day that day, formed a descending triangle, which is bearish. Tweezer bottom, take and run it all the way up until you see a tweezer top, and there's your tweezer top right there. Get out of the trade. Tweezer top, kind of consolidated to the right. Tweezer top, tweezer bottom, runs all the way up to a tweezer top. Get out of the trade right before close. Tweezer top, and she consolidated the rest of the day. So you're looking at maybe a 15-minute time frame. And so you're watching a 15-minute time frame. So you had 3 white soldiers. You notice that you come in, and we had a tweezer bottom here off the 50. So you got a tweezer bottom, and she runs up to a tweezer top, or tweezer top right here, or tweezer top right there, or tweezer top right there, or tweezer top right there. Tweezer bottom, ready into close. You're identifying the pattern on a 15-minute. Then she held support. Tweezer bottom right here, runs up a little bit. So from here to 47 all the way up to 63, $20 bounce. That could be worth $120 a contract. And that's getting it closed at the end of the day, so them things are getting down there to a cheap price. And that's a tweezer bottom to a tweezer top at the end of the day. So then we bounce off to 63. We got a tweezer bottom to a tweezer top. Get out of the trade. That's on a 15-minute time frame. See how commonly they show up? 15-minute time frame. You got a tweezer bottom right into close. Bam. You got these tweezer tops. We had the big knife come in with a tweezer bottom right there on the third soldier, third crow, for a scalp up to the 200 EMA. We have tweezer bottom right here, runs up and hits the 200 EMA out of the trade, the 63 EMA. Next day comes in, we have a tweezer bottom, a little bit higher low, comes up to a tweezer top, get out of the trade. Tweezer bottom, tweezer top. Tweezer bottom, tweezer top. Tweezer top, pulls back. Tweezer top, pulls back. Tweezer top, pulls back. So it's real common. Now we change this to the 5-minute time frame. Let's clean this up. Let's pull up this first day here. We got tweezer bottom. Keeps running up to tweezer top. Tweezer top. But you want to use your moving averages for resistance levels. Tweezer bottom, tweezer top. Tweezer bottom, tweezer top. Tweezer bottom, 3 white soldiers, 4 white soldiers, tweezer top. Get out of the trade. And a double top. Tweezer top, pulls back to a tweezer bottom. Tweezer top, tweezer top, tweezer bottom. Boom, 3 white soldiers, get out of the trade. Tweezer bottom off the 200 EMA on the 5-minute. Tweezer bottom, tweezer bottom, tweezer bottom. We got a tweezer bottom, 3 white soldiers up to the 200, get out of the trade. You got a tweezer top, tweezer top, tweezer top, tweezer top. Tweezer bottom, tweezer top, tweezer top, tweezer top, tweezer bottom, tweezer top. 3 white soldiers. So you're going into the close of the day. You're looking at the 5-minute time frame. You got a tweezer bottom right here with 2 big engulfing candles. Then the third one hits that 21 with a tweezer top, out of the trade. So you had 10 minutes to about, 5 and then 10. And then you formed a tweezer top that hit the 21 EMA. So the next day comes in. You got a tweezer bottom, run it all the way up, decide where you want to get out. If you want to get out at the top of that candle right there, and that's a $12-13 trade. That's probably worth about $100 a contract. Tweezer bottom, tweezer top. Hits the 50 SMA, 3 white soldiers, get out of the trade. Hits the 50 SMA. So my moving averages, just in case you keeps yelling out these moving averages. If you got a pencil and paper, jot these down. I've got the EMAs and 2 SMAs. And the 2 EMAs, 3 EMAs is the 9, the 21, actually I got 4, the 9, the 21, the 63, and the 200 EMA. SMAs, I have the 50 and the 200. SMAs, I have the 50 and the 200. So let's go over this again. EMAs, I have the 9, the 21, the 63, the 200, and the SMAs, I have the 50 and the 200. So you got right here, you got a tweezer top with an inverted hammer, which is a bearish sign. It runs on the way down, and you can get out at the tweezer bottom. Tweezer bottom. Tweezer top. So then you got a tweezer top right into close. It almost comes up and hits the 200 EMA with a tweezer top. Tweezer top's in here. You can get out of the trade. Then you got tweezer top, and it comes down, and it finally comes to the end at the end of the day. Next day comes in. So you got a tweezer bottom, runs all the way up to the tweezer top and hits the 9 for a good little scalp. Consolidated, pulls back down, tweezer top again, tweezer bottom, tweezer bottom, tweezer top, tweezer top, tweezer top. Bounces off the 63, bullish, tweezer bottom, run it up to a tweezer top. And it depends on what time frames you look. If you want to go back and forth in your time frames and look at them. But as you get down to the nitty gritty, when you get down to the different time frames, that's when, it becomes more apparent that you're going to be scalping a lot faster. So you got a tweezer bottom down here, held support all the way up to tweezer top out of the trade. Tweezer bottom back to the 63 again. Tweezer bottom off the 50. Tweezer top. Pulls back, you add on, holds the 21, runs on all the way up to the 200 EMA and SMA. Get out of the trade. Bounces back off the 63, tweezer top to the 200 EMA. Pulls back again. Tweezer bottom, tweezer top, hits the 200 EMA. Here you go again. You got three black crows into an inverted hammer with a tweezer bottom, runs up to 3 white soldiers, you get out of the trade. Here you go again. You got 3 black crows, tweezer bottom, right into close. Sometimes these suckers can really run up. Really run up. You'd be like at 40 cents the other day, and one ran up $6 into close. But that tweezer bottom with a hammer, and then you got the long leg doji, which is bearish, but you get out at the 9. That's on the 3 minute. Then you got the 2 minute. Same thing. This is a scalping trade. So here's a pattern that I recognize a lot. You got the 3 black crows with a tweezer bottom, runs up to a tweezer top out of the trade. Tweezer bottom, tweezer top, 3 white soldiers out of the trade. You got a tweezer top, bearish candles, comes back to a tweezer bottom. You bought a put. You bought a call, runs it up to the 21. You got a double bottom down here with tweezer bottoms, 3 white soldiers out of the trade. Tweezer top, that's bearish, bearish, bearish. Tweezer top, tweezer top, tweezer top. Finally pulls back. Tweezer top, tweezer top, tweezer top, tweezer top. So you know that you're getting bearish with them tweezers. Got lower lows, bearish. Tweezer bottom right into close, boom. That's probably worth about maybe $1 or $2. You're trading the SPX. So you had a good sell-off into close right here, and then you created a tweezer bottom, you jumped in the trade, and within 2 minutes, you're out of the trade with a tweezer top. Just like that. I'm out. And that could be worth about $1, $2 a candle right there. You buy 5 of them, if these are like 40 cents or 50 cents, sell them at $1.50, and you made 300% in 2 minutes. Tweezer bottom. That's on the 2 minute. 1 minute, all day long. All day long. Tweezer bottom, tweezer top. 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 Tweezer bottom, tweezer, and it just goes on all day long. Those are in and out fast scalps. You stay in a trade for a couple minutes, you buy 10 contracts, 5 contracts, as long as you notice that tweezer bottom. Tweezer top pulls back. Tweezer top pulls back to a tweezer bottom off the 63. Tweezer top, tweezer top, tweezer bottom hits the 63. Tweezer top, tweezer bottom with a dragonfly, long leg. That could run back up. You get out at the double top. There's a tweezer top. There's another tweezer top. So that's about it. There's a tweezer. I just want to show you how often you can notice these and you can get in and out of a successful trade. If you got a small count, little by little, eventually 1 trade a day, 2 trades a day. Then you end up having 4 or 5 trades a day. Make it fast and simple. Be successful. Keep, and after eventually you'll have enough money in your account to do, like I'm doing right now, 6 or 7 trades a day, averaging $300 or $400 a trade. And you just start in small. Let's say you were in a trade and you notice a tweezer bottom and you run up and she breaks out a little bit and she starts to pull back and respect one of your moving averages, and you decide to add on a little bit more. Then you come in with a tweezer top and get out of the trade and you double down. But go in small, start in small, and then if it respects your moving averages or it respects resistance with higher lows, you could add on and then maybe scalp it for another couple minutes. But you can do them in different time frames. And the time frames, I got all kinds of time frames that I look at. All kinds of them. I got the daily, I got the weekly, I got the monthly, I got the yearly, I got the hour, I got the 4 hour, I got the 30-minute, 15-minute, 10-minute, 5-minute, 3-minute, 2-minute, 1-minute. And I'm just flipping back and forth in different time frames, looking for what I think is the most attractive pattern that's respecting the moving average is the best. And then I'll just follow that time frame, and I'll still flip it back and forth. Maybe another time frame will tell me, you're at a hard resistance here. You might want to get out of the trade, especially like if you're trading a day trade, and then you look at the hour time frame, and you say, well, man, I'll tell you what, this might be an all-time high on the hour time frame, and I might find it best to get out of this trade. Come in here first thing in the morning, bounce off the 21, then get into a tweezer top and decide to go ahead and get out of the trade and be done with it. Tweezer top, come in, maybe another moving average told me to get in this trade. Then I look at the hour and I say, shoot, it's been 4 hours and we've got us a little bearish candle right here. I might want to get out of this tweezer top. So that's it. I just wanted to show you the reversals in these here patterns, what to look for, what's it mean and how it works. And I'll put this here thing down in the content if you'd like to look at it, and always Google the pictures on them. Come up here and Google some of these pictures and you can see how the patterns work. Here's the wicks where they have a tweezer bottom on the wicks. But I use the bodies mostly when it comes to using the bodies. And that's what I'm looking for. You can just keep going through these little patterns and draw your little diagram down. Put it up on the wall. Save it in your computer. Tweezer bottom all the way to a tweezer top. And then you could see it lower lows all the way through. Tweezer top, tweezer bottoms. So I wish everybody a great week this week. Be with your loved ones on Memorial Weekend. We got Monday off, and I wish everybody a great day. This is the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And this is Ty Sunday. Yabba dabba doo.